We are speaking now about the new value chain. The digital value chain and the dependencies between different organizations is creating a totally new landscape. If we used to look historically on the physical value chain of supplier, raw materials, shipping companies, manufacturers, now there is totally new digital landscape. And this digital landscape is full with different dependencies between different organizations. And we are trying to understand exactly who were the impacted. And in this case, we are looking specifically into the direct damages that were caused to each one of the Fortune 500 companies, irrespectively whether they were using Crowdstrike or indirectly impacted by, for example, outages at the airports, as you mentioned.
Sharon, if we take a look at some of these insured losses, then you anticipate them to fall between, 10 to 20% then of the total financial loss. Does your data then tell you perhaps at all if you're going to see an upward surge and how much a lot of these entities are then insured for in future for elements like this?
We definitely see in the last several weeks since the event happened an increase in the interest of companies. I think that until this event, there was, I think, no company in the world, no insurance company, reinsurance company, or regulator that ever thought about the consequences of an outage of a company like CrowdStrike. I think everybody were much more focusing into malicious events that might impact a wide range of companies or large companies. And in this way, this event actually shifted the point of view of a lot of players from companies to insurers about how this risk is look like. And we definitely see an increase of interest among companies, insurers, trying to better understand how the digital value chain is built off and how they could protect themselves against failures in different parts of this value chain.
Yeah, so I mean, that would also mean in this value chain, you see a lot more entities perhaps not using Microsoft Windows as operating system with regards to this. Would that really reduce as wide a spread and impact of something like this then if you achieve that diversification? And how much of that are you seeing happening perhaps now in the data that you have?
I think that in general, the industry is quite diversified. On the lower level, we have the cloud providers. We have three large cloud providers, AWS, Google, and Microsoft Azure, that capture the vast majority of the market, of which AWS is the bigger player. So the accumulation around those cloud service providers is quite massive. And as you go up in the ladder of the value chains, I think that there is much more competition in different layers. We definitely have to put attention, for example, for areas like CRM systems like Salesforce that have a massive customer base, companies like SAP that is controlling vast majority of the manufacturing sector, or companies like Stripe that is practically controlling a big part of the digital payment chain. So in each level of the value chain, we will find out different companies that we have to identify. Our role at Parametrix is actually to identify those aggregation points, trying to assess what would be the impact if this piece of the value chain will go down, and offer a solution to the industry, whether the insurance industries or corporates, how to mitigate those potential losses that might be caused through an outage of each one of the parts.
Let me ask the slightly cynical question, and what comes next when it comes to the insurance pricing, because I think it's fair to say cybersecurity experts didn't anticipate the extent of this issue. Therefore, it's hard to see that insurance companies would have either. When we're seeing extreme weather events, insurance companies either pull back or they reprice that premium because of the exposure cost. Is that what we're looking at least short term? The cost goes higher from here?
I'm not sure, to be honest, because we've seen quite a dramatic increase in cyber insurance prices for the last several years. And actually, this year was the first year where we started to see a slight decrease. I think that it will take time until the industry will realize and understand the different aggregation points and understand how they're going to manage those exposure. I think that this event was just an appetizer and gave the industry a taste and flavor how those kinds of events could evolve. And now looking forward, we see a lot of effort invested in trying to build up the models, trying to adjust maybe the product in order to accommodate those kinds of risks. Because at the end of the day, I think that the gap that you just mentioned between the economical loss and the insured loss is not something that is really healthy to the economy, because at the end of the day, we would like the economy to trust the insurance industry, and that the insurance industry will be able to cover the vast majority of the losses once they occurred and not leave the customers, our insurers, and exposed to losses. So I think that there will be a process now of both the industry and the insurance industry and the customers, the corporates, of trying to find those solutions. I think that there is a better view now about what could happen. And it will be a very interesting, I think, coming 12 months to see how the industry will react. First, maybe in policy wording, some adjustment to terms and coverage, and maybe slight impact on pricing, but I don't think that it will be quite significant, to be honest, because at the end of the day, I think the losses could be captured. We didn't see a significant capital event for the cyber insurance industry.